Good morning and welcome to the ADS Securities Markets Update. Today we'll start our video with a look at the latest economic releases from the US, which continue to prove that the bad weather in Q1 is not behind the weakness of the shrinking economy in the US. Yesterday's Q1 final GDP came in with a shocking and weaker result. The economy shrank by 2.9%, which is the biggest shrinking since 5 years. Worth mentioning here that the initial GDP figures showed that the economy grew by 0.1%, and the second estimation showed also a shrinking of 1.8%, and the final reading showed a shrinking of minus 2.9%. The spread between the initial and the final reading is the worst since over 50 years. The entire GDP components shrank significantly except the consumer consumption. However, it slowed down to 1% from 3.1%, which is seen as a sign that the consumer recovery is far from reality. The figures also proved that the bad weather is not behind the weakness, and the economy lost over $150 billion in Q1. Furthermore, durable goods order posted the biggest miss in 2014, as it declined by 1% in May comparing to a rise of 0.6%, while core durable goods orders unexpectedly slipped by 0.1% comparing to a rise of 0.3%, while it had been anticipated to rise by 0.3% as well, leading the major banks to lower their GDP forecast for Q2 and the rest of the year as well. Worth to mention here that the Fed GDP target will not be achieved sooner or later this year unless the economy grows by more than 5% in each quarter, and now the annual GDP expectations are down to 1.5 and even below. As for the Asian session today, there were no economic releases, and the European session ahead is expected to be calm with no data sets as well, while all eyes will be headed toward the Euro Union Economic Summit, which will be held across the day, in addition to the Bank of England Stability Report, which will be released around 9:30 GMT time. As for the US session today, there are four economic releases. Jobless claims may rise slightly to 314,000 last week, up from 312 the week before. And core PCE Price Index is expected to rise by 0.2% in May, which is the same rate in April. And finally, personal spending may rise by 0.4% in May after a decline of 0.1% in April. And finally, personal income is expected to rise by 0.5% comparing to 0.3%. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching and have a good day.